All right, good morning, good afternoon, good evening from wherever you're watching. Welcome to Forex Empire YouTube channel. We are going to be doing a quick review on the trade that happened last week on gold. And after that, we now start our directional bias to get our directional bias and all that. All right. So if you have been a follower of this channel, you know that I trade predominantly on gold. And for the past few weeks, I've been bearish on gold. All right. I've been bearish on gold. Now, for last week trade was actually a very beautiful week. What happened was that we had price, we saw price tap into this supply level. All right. So price tapping into that supply level, we started doing what? We started tanking. So it's very obvious that we are now selling off. Okay. So on the process of selling off, which I can see that we took out these lows here. Okay. So taking out that low, what does it mean? It means that the market has switched from giving us internal higher highs to higher to lower lows. The market has switched from giving us higher highs and higher lows to lower highs and lower lows. All right. Now, if you see the structure of gold, you see that we are actually bearish. The market is coming down on gold. So what does that mean? That means that we are selling. All right. But something interesting happened last week. Now, what was that? In this channel, I've told us that liquidity is very important. Okay. Liquidity is very, very important. You can find liquidity at previous day high or low, previous week high or low, previous month high or low. All right. So now we had the market tap into this Wednesday, 29th April, the low of Wednesday, 29th of April. That is the low that the market tapped into and rejected from there. All right. The market did what? Tapped into there and rejected from there. Initially, we had a distribution from internal to external, which is from this fair value gap here. All right. The market tapped, gave us a clear rejection, gave us a pin bar, and then we went to distribute at this external range liquidity. All right. So that has happened. So when you now come to your H4, what can you see? We had a shift in market structure, right? And that means that there is a reversal that is incoming. So until we had this sweep, we had another sweep here, and then the market did what? Rejected from there, and we now started closing to the high side. Or going on to H1, what can we see on the H1? On the H1, we see that immediately we took that liquidity from that zone. We had another structure shift here, taking out this high. All right. We took out that high. After taking out that high with a displacement candle, what happened? We now had a retest of that level and the market started going up. Going to M30, what can you see? You see that on M30, we also have that shift that was present, and then we now started having break of structure to the top side. Now, until we took off this level, right? So taking off that level now, which other block has not been mitigated where we can actually buy from? This one right here. And you see how the market came into it, tapped into that zone and gave more than 1,000 pips. And gave more than 1,000 pips. So this trade happened on Tuesday when it actually took out liquidity on Monday. So it's very important to focus on liquidity, right? Liquidity, market structure, and other blocks plays out very, very well on gold. If you want to trade gold very successfully, these are the three things that you just focus on. When it comes to your technicals, focus on your liquidity, focus on your market structure, and you focus on your other blocks, most especially other blocks that are paired with fair value gaps, right? Other blocks that are paired with fair value gaps, they are high probability. If you look at M15, you see that it was very clean, right? It was very clean. So we had our market structure, had our shift there. So after the shift, what did we have? We have BOS, break of structure, and then another break of structure here, right? So having that, which other block has not been mitigated that has a fair value gap? It's only this one, right? And that is what the market came back, mitigated it, and it started buying. Okay, it started buying. Now going into next week, what am I expecting on gold? Going into the new week, I'm expecting that this high is respected, and then we start going below. We start going down on gold. We actually start going down on gold. That is what I'm expecting by next week. But then it all depends on what we are going to be seeing on DXY. We're actually going to go there right now. But this is the trade that we actually took that gave us more than 8,000 pips on gold. So right now, let us look at DXY to see what DXY is going to be doing next week. Now, if you look at this level, you'd see that we took out liquidity from this level. And we did what? We gave a shift in market structure and then external shift in market structure. So we have that. We have liquidity grab here. And then we have the intention of the market giving us a clear intention that the market wants to buy. Okay, so do we have any other block that have not been mitigated after we had that market structure shift? Yes, we do. So we have this other block right here that have not been mitigated. And we also have a fair value gap. Now, other blocks that are paired with fair value gaps are high probability. Okay, they are high probability areas. So let's just use this one. So now the market is right at that point. You see, for the past 1 month, we have just been at that price level. We have just been at this price level. This is week 1, week 2, week 3, week 4. So for 1 month, we have been at this level. And the market is finding it difficult to break this level. All right. You see, the first week we came, we rejected. Second week we rejected. Third week we rejected. Fourth week we are actually rejected. And now I am seeing something that is very, very interesting for people who trade CROT. For people who trade CROT, I am seeing something very, very nice. And that is this. Let me take this out. And that is this. We have a previous week low here, and then this market came, grabbed liquidity from this level and rejected it. So for people who trade CROT, we have a higher time frame order block that was mitigated plus a fair value gap. And then we are doing what? We are rejecting off this price level. Okay, so it's anticipated that the next candle that is going to come is actually going to go to the upside. It's actually go to the upside. So the next candle that is going to come is actually going to go to the upside. It's something to look out for going into the week. So for the US dollar, I'll be bullish. For the US dollar, I'll be bullish on the DXY. All right. So if I am bullish on the DXY, then it does mean that every other thing will be bearish. Okay. Every other thing is bearish. So you see this price level, we have been rejecting from this price level. Okay, we have been rejecting off this price level. So I am anticipating, you see, we came back into this order block to mitigate this order block on H4. So I'm anticipating and I am expecting that the market will open and give us a push to the upside. I'm expecting that the market will open and give us a push to the upside. All right. So that's for DXY. Then for gold, like I said, I'm anticipating that we are going to go lower. All right. We are going to go lower on gold. We have these levels that have not been mitigated that we are anticipating that gold will come into, giving us a low, a higher, a lower high, and then eventually tanking into this level. Okay. Then for BTC, I'm expecting this high to be taken out. Why? Because we already have shift in market structure on H4. This is H4 time frame. So we have a shift in market structure on H4, and then we have this other block, we have this fair value gap. So I want the market to actually give us some kind of shift to the upside and then absorb a lot of traders, a lot of order within that area, and then reject, then will now continue to the downside. Okay, that is what I am expecting for gold and BTC. Now this is silver. You can see that on gold, when we had the market structure shift on gold, we had liquidity grab, but then on silver there was nothing like that. So it was gold, they were actually walking gold, and silver was left untouched. Silver was left untouched, and then it actually followed the structure. Okay, but gold was manipulated, liquidity was taken out, and then opportunity was given for traders to join in. So this is what my directional bias for the coming week is going to be. Okay, so please, I would like you to hit the subscribe button, drop your comments, drop your views on the pairs that I've analyzed. And if you want me to analyze other pairs, please make sure to drop on the comments, and then you tell me what you have learned from this video. Thank you.